Welcome back to Rebel's Edge, where we're going to cover Caterpillar exploding to new highs. But does it hold? We'll have more on Rebel's Edge. Bang! Thank you for joining us today, folks. It is Monday, February 5th, and we're delighted that you could join us. I'm Jon Najarian. He is Pete Najarian, and Jared Winkman is handling all of the difficult tasks of getting this up on all the different streaming sites. And we welcome
corralling us. Let's be honest.
Well, and by the way, Pete, you were on with Charles on Friday. I couldn't make it, and Pete did yeoman's work jumping on with Charles. How did that go, Pete?
It went great. I'll tell you that Charles is a wonderful guy, and it's fun. Jon, you and I got to get together with him a little more frequently together, you and I. But I know you were busy flying, and I was free, so I had an opportunity to talk about some of the great stuff that we had last week. They just wanted to talk about options. They have embraced the derivatives world, Jon, which is fantastic, I think.
Yep.
And, many have not, but you take a look at that, the meta that you had already discussed, and they'd already had that on Fox Biz already, and they had an opportunity to see that. But then I gave them a few things that were going on actually just on Friday alone. And so they were pretty excited, and so was I, and it was a fun time. It was real quick, bang, 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 but we got through it.
Yeah, that's Charles Payne, folks. Making money with Charles Payne's on every business day at 2 p.m. Eastern time. So tune into that. Liz Clayman follows him up at 3 with the Clayman countdown, and then Larry Kudlow at 4. So they got a pretty killer lineup.
Yeah.
All right, let's dive right in, Pete. We always start with the macro minute, and I'm going to say anybody who saw Jerome Powell on 60 Minutes last night, as Pete says frequently, and I always agree, he's a straight talker. And he said, be cautious about when you guys think you're getting these cuts. Yes, we said we might give as many as 3 this year, but I think you guys are optimistic about when that might happen.
Well, and not only that, Jon, but the idea that some of these lunatics out there were sitting there going, oh, yeah, they're going to have to cut 6 times. They're going to do this. They're going to do that. And it's like, really? Have you not listened to one word from the Fed over the last couple of years? Have you not listened to Jerome Powell talking about we got to see what the data says? Jerome Powell talking about all the different things that are reasons why it's not the most predictable thing in the world at the moment. But the one thing you can predict is they will wait for the data. And when they get it, that's what they're going to use to make some of those, very difficult decisions. So I think he's been almost a little bit. The continuation of hitting this topic, Jon, is probably why we're seeing the markets getting beat up a little bit today, specifically the Dow. And I think a lot of that has to do with just that people are getting a little worried. Well, when's he going to cut? Maybe he won't cut it at all. Well, now they're going to the other extreme, right? I mean, so it's crazy, but I think that he has been very clear, and you and I have talked about that many times.
Yeah, absolutely. And like you've said, I think he's one of the straightest talking Fed chair of all time, with a difficult job because everybody else got to be Santa Claus, Pete. Bernanke and Yellen got to be Santa Claus, give them toys, give them candy, whatever, because all they did was cut and keep them low. This is the guy that's had to do the tough work of, raising rates and having everybody hate him for it. So, well, let's talk about futures, Pete.
Fantastic futures.
That's right. Futures man flying across the screen. We love talking about futures, and one of these days the CME might be part of this, Pete. But boy, you got a plethora of things you could pick for the futures today. It could be Dow futures, it could be NASDAQ futures, it could be the 10-year note. And so I'm going to let you take it, Pete, but I'm going to agree with you. I think it is the 10-year.
I think that's the one that we all should be focused on, Jon, because it is something that everybody looks at, and then the reactions begin from that. And All you've got to do is go back to January 31st, not that long ago, and we were sitting at a 3.81 on the 10-year. Well, today we hit 4.16, and I think you just corrected me. We're even a little bit higher than that. So that's a very, very rapid turn to the upside. And oftentimes when you're seeing that 10-year move to the upside, people start saying, well, I'm going to be able to do this. I think I'm going to sell that. And we're seeing the sellers come out, not so much on the NASDAQ, but definitely on the Dow today, John, getting pounded pretty good. And I have a funny feeling that the 10-year's got a lot to do with that.
Certainly does. The mortgage rates that tie pretty closely with the CME data, folks. When that data is moving up, now granted, mortgage rates don't necessarily move every day of the week, but when they've made the dramatic move that they've made, as Pete said, well, they've been creeping higher and they just topped 7% again. They were solidly below 675 maybe a week ago, Pete. But very quickly, they've moved back to a position of 7.02 or something like that. And that's, of course, the conforming 30 years. So just watch the CME and watch that 10-year note and the bills and all the rest. You get a pretty good idea of where we're going. And the volume's pretty strong in there too, Pete. 1.6 million is how many of those futures have traded so far today over at the CME. Yeah. All right. Well, let's dive right in, Pete, to a big Dow stock, the Caterpillar, because Caterpillar came out with earnings that were fabulous. Basically, they hit a new high, but they hit a high so quickly, like 334 and change, Pete. That's $334 a share. Blowout earnings report, everything good, profit margins good, everything was strong, but it couldn't hold on to that pop. Because as soon as we hit 334, the hands came out and people were just sold.
What an amazing run to the upside, though, John. Like you said, I mean, the numbers were great. Their profits were outstanding. They were up a couple of percent, so the profit margin. So when you look at this report, you can understand why 334. And also, when you look at the valuation levels of where it is, it's another reason to say, well, that could actually hold up there. It didn't. It got the spike. It sold all the way back down. Last I looked, it was around 315, 316, something like that. So a dramatic pullback, almost back to flat, John. But the one other interesting thing about this report today was not only was it a great report, but on top of that, they actually talked about, I know this sounds crazy, but they talked about AI. And they talked about how AI could be implemented in their world as well. And that is something, they were very honest. They actually said, look, this is something out into the future, and I'm talking years. So they were not just going crazy saying, oh boy, AI, we are all in. But they were talking about the fact that is part of what they're looking for the future. And when you're looking at a name like Caterpillar, you're not really looking out 3 months, 6 months. A lot of the time you're looking out 3 years, 5 years. In that specific kind of a time frame, I think that's why AI is something that certainly will be a part of Caterpillar, along with a lot of those others in that kind of a space.
Pete, when you look at the chart, this thing was $220 back at the end of October. So, just a little over 3 months ago. It hit 334 today. So when you put on volume and you put on market cap that fast, somebody's going to take some profits. It's not even a huge profit taking. To see the stock down 15, $16 from the highs, not the end of the world, but wow, that's been a heck of a run, to your point, over the past 3 months.
And John, real quick, I'll just say this. It must be part of the Magnificent Seven, though, right? Because there's only 7 stocks in the market that actually move. I mean, that's what we're told every single day from guys on TV, 4-letter acronym. I mean, we hear it all the time. Oh, the Magnificent Seven, the Magnificent Seven. Well, sure seems like Caterpillar had a hell of a run. Is that part of the 7? I don't think so.
Yep. Caterpillar is a $160 billion stock, folks. But given that they added, $100 to a $200 stock, that is a huge amount of market cap, and obviously overlooked by a lot of other people on TV that are supposed to be talking about what's really going on in the markets, and they rarely get it right. Let's talk about Air Products, Pete, APD, because these guys down big, came out with quarterly earnings. Basically, they're chemicals as well as the name implies, air products. And revenue was down almost 6% year over year to $3 billion. The street's expectations were missed by almost $250 million there, Pete. So that ain't good. And I can't imagine they had too much good to say about going forward progress for making that better either.
No, it's pretty awful, John, the entire report. And that's why the stock today hit 52-week lows. And they didn't give you much of a reason to say, you know what? Oh, yeah, I think I want to jump into this stock. I don't think that's really the case. Sometimes we see that and you go, you know what? Maybe now is the time. I don't think that it is. They've still got a problem with cash burn. It's very high. And when you look across and you look at some of these numbers, the Americas itself down 10% year over year in terms of rev. So there's a lot of issues that they've got to deal with right now. This is not one of those where, hey, it's fallen. I think it's going to get up and start to run. I don't see that. I think you got to wait for some form of a turn. And it might take a few quarters at least, maybe till the end of the year before we see something like that start. And I'm not even saying it's going to start to turn. But if you're looking at this one and you're saying, hey, it's gotten a hit and I think it's an opportunity, I think you need to look a little bit closer.
Pete, like a year ago, the stock was 320 a share, and today it's trading 223. So yeah, it's the exact opposite chart of Caterpillar. If you flip those two charts, you could say Caterpillar, air products, Caterpillar, air products. That's the way it looks to me.
Yeah.
It's pretty ugly. Let's take a look at a good one though, Pete. Makeup and so forth. Beauty products over at Estée Lauder, EL, up big, beat analyst expectations. Revenue was still down, so it was down over 7.5% year on year. But their non-GAAP profit of 88 cents was down from a year ago profit as well. But people were more focused on the guidance, I guess, Pete, and free cash flow. But I didn't see that much that was great in this report, to tell you the truth, Pete.
I'm really glad you said that, John. Neither did I. I mean, I looked at the free cash flow, and yeah, 1.1 billion. That's a great number, obviously. But they do have high debt. They got cash burn of $1.5 billion. So I mean, they've got some things that where I think you might scratch your head a little bit. And the last thing I'd point out about these guys, because there is competition out there. They're not like the only one out there doing what they're doing in beauty products. So when I see a PE of 65 for a company like this, it makes me start to think, you know what? It's a little overvalued. I think it actually could ease back maybe even at a pretty swift in a hurry at some point. I don't know when that comes, but this particular report looks pretty good in certain areas, but not in others. And I think that if you're looking, there are far better areas in this same exact segment that you'd maybe want to look at. I think this name is stretched. I don't like that PE being as high as it is, 65. That's price to earnings. I think that there's a lot of reasons to kind of question the move that we're seeing today.
Yeah, I am. I certainly would not be a buyer on this pop, Pete, because I think that's going to reverse pretty quickly, especially if the market stays a little soft because of some of the, strong economic report that we had last week, and the Jerome Powell comments that were on 60 Minutes that we talked about. All right, so now we go to Catalent, Pete, CTLT. This one, Novo Nordisk, which is the company that makes that Ozempic, they can't make enough of it fast enough, Pete. People that really need help because they can't do it on their own, I guess. They can't lose weight through the use of Ozempic and some of these other things like Wegovy or whatever the heck it's called. People are losing weight. Okay, but you got to be on it for the rest of your life. It's kind of like minoxidil, Pete. I remember when our dad gave us minoxidil, and as you see, it worked like a charm.
Not too good for me either.
But part of it that was so frustrating, Pete, was you kind of developed a little fuzz on top of your head. Some people might do a lot better than that. It didn't work for me, but that was in my 20s when I started losing my hair. But the idea that you have to do it for the rest of your life and it affects other parts of your body, you got to have at least a slight concern about Ozempic as well, right, Pete?
I would think so, John. I mean, anytime you got something that it sounds so perfect, it can't possibly be that perfect, can it? I mean, it just, you have to have some questions. And let's be honest too, a lot of these different things, we're talking about obesity and diabetic drugs and so forth. And what was the original intent? Was the original intent for people to be able to do this? No, it was different. And so, they're kind of going off in a different area, but it's a monstrous part of the world because we know obesity is a problem. Diabetes is a problem. So, these are something that already alone would be something that really does stand out. But on top of that, a lot of the folks that are using this for the reasons that a lot of people are right now, trying to lose weight, trying to get their weight down. But this is a big buy. This is an $11.5 billion buyout that's going on with Novo. And to be able to produce more and more and more. And you can understand why they want to do this, John, because when you look at it and you look at the kind of growth rate that they are getting for these drugs, Ozempic being the primary one. But when you look at some of this, you just go, my gosh, it was up how much percent last year? Year over year, up like 79%. These numbers are unbelievable. They're pretty close to outrageous. And I will say the one thing that, our father being a transplant surgeon long ago used to say to me, John, he said, kid, try to invest in somebody that's doing anything in the world of diabetes because it is a major problem in the world, but specifically in the United States. He was right. He said that maybe 40 years ago, John, when I was going to the University of Minnesota, he was the chief of surgery. And I've tried over the years to try to find a couple of these different companies in the diabetes world. But as you and I both know, it's not like these specific companies just do one thing. They do multiple things. So you can't always get exactly what you're looking for in just one drug for one company. And that sometimes is part of the issue. But this is certainly something that is not going away anytime soon. People are pretty excited about what's going on.
Yeah, and they just needed more production facility, yep. Pete. So that's what Catalent is part of this one, folks. It's not like Catalent was the maker of Ozempic or anything else, but they can help them produce a hell of a lot more of it because people tell me, Pete, it's sold out, yeah. that they can't even get it. They have to get the secondary one, the almost generic, but it's not generic, but it's the other one that not everybody knows the name. Mm-hmm. All right. Well, what do you got for Red Zone Sports today, Pete?
Well, you see Ludacris up there as the top one, and it's not the rapper. We're talking about, I'm going to go on a little bit of a run here, John, and see if you agree with me or not. And is it ludicrous if we both agree anyway? So here it is. Do you really want Purdy right now or Mahomes? Now, I'm saying that, and I'm not being facetious at all. And here's why. Here's what he looked like. Both these two players looked like this year, John. Purdy's 69% completion. Mahomes, 67%. 31 touchdowns and 11 interceptions for Purdy, 27 touchdowns and 14 interceptions for Mahomes. You got a rating of 113 for Purdy and 92.6 for Mahomes. The number one QBR belongs to Purdy by almost 10 points over Mahomes. So I throw it to people because I think it's something that's interesting, John, for a lot of people to kind of look at because they don't want to accept that Purdy's pretty damn good. They don't want to accept that this guy was Mr. Irrelevant, so he shouldn't really be doing what he's doing. So they almost completely dismiss it. I'm here to tell you that after watching him in the second half of some of these playoff games, and that's when he really stars. Now, he's had his issues. He threw some interceptions in games. I think he had 4 interceptions one of the games, not in the playoffs. But he has done just about everything you could ever imagine a first pick in the draft doing 2 years ago. And meanwhile, he was Mr. Irrelevant. So I think it's pretty damn interesting to see how people don't want to embrace him, but Patrick Mahomes is the second coming of you-know-what. So what do you think right now? Who is the better quarterback and why? And I'll tell you, I think Purdy can run well enough that he's almost sort of got a little bit of that ability to do what Mahomes does as well. Now, people are going to rip me for that, and that's fine, because the reality is just take a look at some of the numbers, look at the offense for the 49ers, and you tell me if this kid isn't one of the best quarterbacks in all of football.
He is. He is one of the best, but he's not Mahomes yet.
Right.
Now, that doesn't mean that I don't think he's going to beat him, because I do think he's going to beat him. I do think, Pete, San Francisco is going to win. I think, McCaffrey, Christian is just a machine. I think Debo, they don't have a Debo on Kansas City. No. They've got some guys that are pretty good, but they're inconsistent. Debo is not inconsistent. Debo is consistently one of the best there is. And they've got Kittle, who might not be Travis Kelce, but he's like that close, Pete.
I was going to say the same thing.
And both of them are a lot of fun. So that's not a rip on Travis Kelce. And Kittle, I think, is a little younger, but Kelce is, I think, 33 or 34, Pete. Mm-hmm. So he's getting up there. And, whether or not he gets on a knee at the 13-yard line and asks Taylor Swift to marry him or whatever, I care less. I'm not against them having a great love affair. If that's what it is, fine. But as far as Purdy, Pete, do you know he's only the 6th quarterback in the history of the draft to be taken with the Mr. Irrelevant spot? Mm. I mean, a lot of times people just throw that one out there. Right. It's just a Hail Mary anyway. And like they pick some kid from a D3 school or whatever. But I think he is going to keep developing into a great player. He's got a great attitude. The team loves him. The team rallied around him like crazy. And that's why when they went down in the Philadelphia game last year, it more or less ended their season right then and there. Yes, I know they didn't have another quarterback to put in, but it was pretty much done in that playoff game when he went down. I do think he's going to do great, and I don't think that there's a stage too big for this guy, Pete.
Well, and that's the thing that I like so much about him, John. He's got that ice water in his veins, like a lot of quarterbacks do, but he's pretty special. I mean, the guy doesn't ever look like it's too big for him, despite the fact he's an Iowa State kid, right? I mean, it's not like that's quarterback Iowa State, but it's interesting to see how the guy, his reaction to things. He's got Brian Greasy as his coach, doing a great job. He's mentored this kid. And then you got Shanahan, who's probably one of the better offensive-minded coaches in football. I think between the coaching that he's gotten in the last couple of years and what he's been able to accomplish, someday everybody's going to appreciate him a little bit more. But he hasn't won a Super Bowl, and this will be his first shot, but he has not won a Super Bowl. But that is sort of the measuring stick that a lot of people will use against him. So that'll be something I think pretty interesting. How about head coaches in the NFL, John? We had a lot of openings. We do every single year because it's not for long and everybody's getting fired and this, that, and the other. Everybody is now in their position. So I'm kind of curious what you think. I'll throw out this one. The easiest one is to say Harbaugh with the Chargers, because Harbaugh is that good. The Chargers are that close, even though their record was awful. And they've got some problems with the payroll on the defensive side and the defensive side getting pretty old. But he's got a great quarterback, great offensive line, some great skill position people, and all the rest of it. I think Harbaugh will do well. I kind of like this guy, John. Pete Carroll was a defensive coordinator. He was a defensive coach. He was a backs coach. He coached at USC. He coached the Vikings, coached a lot of different places in his career, finished up in Seattle, a team that actually had a winning record last year. And this kid McDonald that they hired. Now, he's 36 years old, John, out of Baltimore, the Ravens, and he was their D coordinator. So he's young, he's hungry, he's a defensive-minded coach. Sounds a heck of a lot like how Pete Carroll started 30-some-odd years ago, 40 years ago, because Pete's in his 70s. But I kind of like what this kid kind of brings to the table. He's kind of like a Pete Carroll of old, when he came into the league and got the opportunity to be a head coach. What do you think? Is there somebody else that you're kind of looking at saying, this guy's going to turn this team around?
Well, I'm going to say Harbaugh, Pete, but what I'll say is he's already looking at a certain D coordinator, which hasn't been confirmed yet. So instead, I'll talk about the guy that he did hire. He got this guy, Greg Roman, to be the offensive coordinator for him. And this guy, he's a grinder. What do I mean by that? He started off as the strength coach, Pete, for the Carolina Panthers, I believe. And then he coached tight ends, and they had a great one for a while, Greg Olson. He grew into the position, and then he went, with Harbaugh, and he was coaching Alex Smith, who was a great quarterback, became a better quarterback after he started coaching him and so forth. So I think that's a guy that gets a lot of respect probably from Herbert in, I was going to say San Diego, but it's, of course, the Chargers, LA Chargers. So I think Harbaugh's putting the pieces together there, Pete. And it's a question of, as you've said all along, is he going to hire, or is he going to just load the team up with tight ends and make Greg Roman play that kind of game? Or is Greg Roman going to have a little more of a free hand? I think it's going to be a negotiation. And I think that you won't just load them up with tight ends, Pete, because you've got a quarterback who's so good that he's going to deal the ball to a lot of different players. And they're not just going to pound the ball, in my opinion anyway, Pete, like Michigan did with the, sometimes 3 tight ends on offense. But I think this guy's a good coach, and I think he's like a quarterback whisperer these days. So I think he's going to be good for Herbert.
Yeah, that'll be great. I Jim has a schedule, John. I'll say it that way, a schedule of how he wants to do it. I think we will see a lot of tight ends on the field on first and second down, maybe on third down. If it's third and long, he might pull off a couple of those tight ends and let Herbert have a rip. But, he had so much success at San Francisco. Obviously, he did at Michigan as well. But everywhere he's been, Stanford, doesn't matter. The guy just has had success, and he still has that Bo Schembechler in him. So, in a league where everybody's throwing and he wants to run it, it's kind of an interesting concept because it worked before. I think it could potentially work for him again. It'll be really interesting to see who, all the rest of the coaches for some of these various teams, because they're still starting to put them together. But there's a lot going on. As a matter of fact, did you see Kingsbury, the Arizona coach? Anyway, he went to the Raiders, and then all of a sudden he says, "Nah, I'm not going to take that job," and he ended up going out to Washington to be the offensive coordinator there. Should be interesting to watch, though, John, because there's a lot of movement going on in the coaching world right now. It's incredible, and the NFL never stops. As soon as we're done with this, the Super Bowl, it's free agency time.
Yep, and there are going to be a lot of interesting, like you said already, Pete, that the linebacker for the Chargers, who we had, Khalil Mack.
Yeah.
Khalil Mack, hell of a player. And even though he's old, he's still a hell of a player. But can you pay him that big cash, or do you have to deal him? I think they're going to deal him, Pete, because they need some salary cap room. And even though he's a great player and had a great year, I think they might have to deal that guy.
Yeah. Should be fun. The NFL is always fun.
Yep. Well, we hope the Rebels Edge was fun for all of you. And remember, we've got a new AI tool, folks. It's called Rebel Research. And if you go to our website, marketrebellion.com/research, there it is, you get an AI tool that will do fundamental research, technical research, as well as sentiment research. All you have to do is type in the stock symbol, and it will tell you exactly support, resistance, several different levels, 20-day moving average, 50-day, 200-day, like that. It'll also give you fundamental analysis of that same stock symbol and sentiment analysis. So before you make a trade, you know that everything's lining up, or 2 of the 3 are lining up, or maybe none of them line up, and you don't want to do that trade. It's $19 a month. And if you go on over to marketrebellion.com/research, you can see all about it. Well, that's it for us. Pete and I will be back tomorrow at 1 p.m. Eastern Time. See you then.